First few commerce students to Exam Tips and Tricks channel. Various transactions are given in the question where we need to journalize these transactions. First transaction, 2024, January 1st, business started with cash, 2 lakh. January 2nd, opened a bank account with SBI, 20,000. January 6th, sold goods to Gopal, rupees 50,000. January 10th, salary paid, rupees 5,000. January 15, bought goods for cash, rupees 60,000. January 20th, machine purchased from Akash, rupees 80,000. January 25, commission received, rupees 4,000. So, the format of journal entries will be date, particulars, ledger folio, debit, amount, credit, amount. So first transaction, business start with cash. So cash account has to be debited. Capital account must be credited. Cash is an asset. Increase in asset must be debited. So cash account debtor to capital account. Right narration has start business with cash amounting to rupees 2 lakh. January 2nd, opened bank account with SBI. Firm has opened bank account. So both bank as well as cash account are assets. Bank balance increases, cash balance decreases. Increase in asset must be debited, decrease in asset has to be credited. So bank account must be debited, cash account has to be credited. So the journal entry will be bank account debtor to cash account amounting to rupees 20,000. Right narration as opened bank account with SBI. So it has to be totaled. So this total amount will be 2,20,000. It has to be recorded as total carried forward. Next, to the next page, it must be recorded as total brought forward. So next transaction, January 6th, sold goods to Gopal, rupees 50,000. Gopal is a customer to whom firm has made a credit sales. So Gopal's account has to be debited, sales account has to be credited. Sales is a revenue for the firm. Gopal as is a customer, that is a debtor, which is asset for the firm. So increase in asset has to be debited, Gopal's account has to be debited, sales account has to be credited. So the journal entry will be Gopal's account debtor to sales account. Right narration as sold goods to Gopal with rupees 50,000. January 10th, salary paid. Salary is an expense for the firm. It is paid in form of cash. So salary account must be debited because salary is an expense. Increase in expense must be debited. Cash is an asset. For the payment of salary, there is decrease in asset. So cash account has to be credited. Salary account debtor to cash account. And narration will be salary paid with rupees 5,000. January 15th, bought goods for cash. So it is a cash purchase transaction. It is not a credit purchase transaction. In case if it is a credit purchase transaction, then name of the supplier that will be specified in the transaction. So it is a cash purchase, goods bought. So purchase account has to be debited to cash account. Purchases, that is an expense for the firm. Increase in expense must be debited. So to cash account, cash is an asset. So decrease in asset must be credited. So purchase account debtor to cash account. Narration will be goods purchased for cash amounting to rupees 60,000. January 20th, machine purchased from Akash. So it is a credit purchase transaction. Akash is a supplier from whom firm has made a credit purchase. So Machine is fixed asset, so machine account has to be debited. And Akash, who is a supplier, there is increase in liability for the firm, so machine account debtor to Akash's account amounting to rupees 80,000, so narration will be machine purchased from Akash. Last transaction, January 25, commission received, so there is receipt of commission, so commission is received in the form of cash. So cash is an asset, increase in asset must be debited, so commission account has to be credited, cash account has to be debited. Commission is a revenue, so increase in revenue has to be credited. So cash account debtor to commission account amounting to rupees 4,000, and finally it must be totaled, and total amount will be 4,19,000. So this is how these transactions has to be journalized. Thank you.